Welcome to Brookfield Perspectives, a podcast that explores the Brookfield ecosystem's role in creating sustainable wealth on a global scale. For our last episode of 2025, we're taking a look back and turning towards what's next. In November, over 400 private market investors joined us in Phoenix, Arizona for our annual investor conference. Today, we'll share some of the top insights from our general session, which featured senior leadership across our businesses, and reflect on major themes and trends on the horizon. First, let's begin with a look at how long-term investment themes take shape. Here's Connor Teskey, president of Brookfield Asset Management.
It was over a decade ago that we identified data as the fastest growing global commodity, one that would need to be transported, stored, and processed at unprecedented levels. It was towards the end of the last decade that we saw that corporates would create a new era of energy demand that would require any and all or all of the above type generation solutions going forward. At the same time, we identified private credit as an important pillar to grow the economy and would become a permanent fixture in the financial system, providing capital to drive growth across businesses and asset classes that we focused on. So this process of continuously focusing on what's next and continuously evolving our business is ongoing and continuous. And today, what does that mean? It means new products like AI infrastructure, one of the largest capital needs of this generation, where we can build the critical infrastructure that will drive business productivity across assets and economies. And we get to invest these significant sums of capital against long-term corporate offtakes with the largest and best institutions and governments around the world. Similarly, we focus on private credit, but the sectors of the private credit market where we see the best risk-adjusted returns and where we believe we have a competitive advantage to win.
Connor highlights how major investment themes rarely appear suddenly. They build over much longer time horizons. The ability to recognize those inflection points early can influence how investors deploy capital and how new sectors form. Of course, one of the most salient shifts in nearly every business and industry recently is the growth of AI. For Brookfield, that means an enormous growth opportunity in the backbone infrastructure needed to power this technology revolution. Several speakers pointed to how AI is extending beyond software and into the physical world. Stuart Upson, head of Brookfield's Global Strategy Group, emphasized how quickly this shift is accelerating.
What we think is that AI is evolving right now into agentic AI, and that is kind of the now. That is the thing that is happening and impacting the world and the global economy in a big way. As we think about AI, though, we think about it as a flywheel of technology that is making the world advance faster and faster, and it's even more important now than it ever has been before to stay on top of these key trends. We think it's likely that in the fullness of time, the humanoid or embodied AI, robotics, could be an even bigger market than AI in the software form.
With all the momentum behind AI, the question is everywhere. Is all this growth actually sustainable? Here's Sikander Rashid, Global Head of AI Infrastructure.
For us, for the last 3 to 4 years, in our power business and our data center business, we've seen exponential growth, and it is all contracted. So the way we think about this is we're investing capital, large-scale capital, and building hard infrastructure for some of the best technology firms in the world, some of the best sovereign governments in the world. And that's unprecedented. I think we can go back and look at all the previous bubbles, including the dot-com bubble, but the off-takers and the contracted nature of the build-out is what makes this one different. And are there bubbles around the edges? Yeah. But fundamentally, again, this is a long-term trend, and we expect over the long term, it will change the world. And without this infrastructure, we'll never get there.
While the technology evolves quickly, the physical systems behind it, power, land, networks, and operating platforms, must scale just as rapidly. These areas of focus shaped much of the discussion at this year's conference. Natalie Adamate, Chief Operating Officer of our renewable power and transition business, summarized the needs from an energy perspective.
The most important thing for us right now is providing as much power as we can quickly. And I would say it's not just providing the scale of power, which is absolutely going to be required over the next decade, but the power market is becoming more complex, and therefore our customers' needs are equally changing and adapting to that new power dynamic. And so one of the things we're seeing is an increased focus not just on affordability, which has been the real driver for a lot of renewable power capacity that's come online over the last decade, but increasingly it's affordability mixed with reliability, mixed with the ability to get that power as fast as possible to the grid.
Nearly 90% of global clean energy demand for data centers is with hyperscalers like Amazon, Google, Microsoft, and Meta. At Brookfield, we have seen our business with these partners double in less than 2 years and expect electricity demand forecasts to keep rising. Here's more context.
We signed a 3 gigawatt partnership with Google around our hydro portfolio. We've executed other framework agreements with other major providers in both the technology sector as well as other technology sectors. And of course, the $80 billion partnership we've now signed with the US government to scale the rollout of nuclear. I think these are all great signs to show that being able to combine the different technologies within our portfolio and to scale that quickly can be done.
Meeting that level of demand isn't just about generation. It also requires the transmission systems to move that power where it's needed most. Here's Gail Miller, Head of Strategic Investor Engagement for Brookfield's Global Client Group.
We heard that compute moves faster than power. We can build compute faster than power. So can we actually accomplish these goals knowing what we know and how fast it's moving? Those of us that have worked in power for a long time have never seen these step increases. 22% increase in data center demand alone. That doesn't include electric vehicles, computers, regular day-to-day activities. And the other big constraint we have around the world is this question of the grid. The grid didn't anticipate this power, and in fact, we didn't build power for 10 years. We stopped building in 2012 because nobody knew what was about to come.
Gail and Natalie underscored a central point. Meeting rising global demand for electricity will require a mix of technologies, faster development cycles, and long-term planning across markets. Next, we'll hear from Sam Pollock, CEO of Brookfield's infrastructure business, who has a front row seat to the upgrade of power transmission infrastructure.
The vast majority, 50 of maybe the top 75 utilities in the United States, have increased their capital expenditure programs for the next 5 years by about 50%. I mean, that's a staggering increase in their capex. And these are not companies that are known for making dramatic changes.
So that tells you what they're faced with.
Brookfield CEOs wrapped up the general session with a wide-ranging conversation across the private markets. Here's Brookfield CEO Bruce Flatt setting the scene.
I'd say there's really 3 things that encompasses that are really important. The reindustrialization of economies to, I'm going to say reshuffle, but move around supply chains and with what's going on in the world. The continued enormous build out of real assets, both new infrastructure that's coming, but everything around the backbone of the global economy. And then third, something that's happened in finance in the last 10 years, which is the rising influence of private credit, is really important. And I'd say it's one of the largest changes that's occurred in global finance in a long time.
No conversation about real assets is complete without real estate. Bruce and Lowell Barron, CEO of our real estate business, shared their perspectives on the market dynamics in the current cycle.
I've been around the investment business for real estate, in particular, of people that think the world is coming back and it's amazing, and the ones that think that the world's coming to an end. What happened? Why is that? And is that true, or am I just behind the times?
I think the reality and the right way to think about it, the way we think about it, is actually that the decrease in value happened 3 or 4 years ago already. And it's just a matter of the time that it takes for that loan to go into default, the maturity to come, the foreclosure to happen, the asset sale to happen. And in fact, that signal is really positive if you think about it, because it means that real estate prices have reset. They're much more attractive. It also means that now you have people who are selling, buyers who are buying. So the market has converged where there's real transaction flow. That's pretty important. Demand is pretty healthy across almost every asset class, and supply is severely curtailed. Probably the most important thing that's happened in the last 4 years is that the cost to build real estate's gone up probably 40%. And so we're in a really good place for fundamentals. And now that the transactions are coming back, it's probably a great time to be investing.
Next, Craig Noble, CEO of Brookfield's credit business, talked about the state of the private credit markets.
Private credit markets are still relatively young. It's really in the last 5-10 years that the private credit markets have been growing as an important part of the market. Banks have been retreating. Banks in many areas are no longer in the lending business, or at least not to the same extent that they have been. And that's been the window for private credit to come in and offer very often much more flexible solutions.
Both Connor and Craig touched on the headlines around the credit markets today and what the impact is for private credit investors.
Well, there are certainly segments of the private credit market that are seeing more compressed spreads and maybe some covenant loosening today. We're focused on real asset and asset-backed finance that is driven by those same key global growth trends that drive the expansion of our equity business, and where there continues to be a supply-demand imbalance in favor of the capital provider, ensuring attractive spreads and the appropriate lending protections.
Asset-based lending is one of the bigger growth areas. The banks continue to retreat, requires a highly specialized skill set to lend into, whether it's aviation, consumer, industrial companies. And that's an area where there's also, because of that specialization, the opportunity for excess returns. And really, private credit is all about getting excess return relative to the liquid market. There's no doubt these are risk assets. There have been defaults. There will be defaults. A few of them have been more high profile, but I would put that in the context of the credit markets, not the private credit markets.
Wrapping up today's episode is Anuj Ranjan, CEO of Private Equity, on where we're seeing opportunity across the sector and the importance of operational expertise in value creation.
The key word there is industrials. I mean, we really need to see productivity gains in all of these companies. And I think the future, we're trying to invest and create future global champions. And before we were doing that in many ways, and technology was always a part of it. But with AI, humanoid robotics, some of the advancements we're seeing, the future industrial champions are going to be those that connect the dots. They learn and they get data off of their machines, their energy grids, their logistics, their customers, and they use that to make real-time decisions and to run their businesses better. And it's important as an investor to be able to have scale and operational capability to actually implement that in the real industrial businesses.
As Anuj said, success will come to those who connect the dots. And that's what we've tried to do for you all today. Thank you for listening, and stay tuned for more Brookfield Perspectives in the new year.
This podcast is for educational and informational purposes only and does not constitute an offer to sell or a solicitation of an offer to buy any securities or related financial instruments offered or sponsored by Brookfield. The information and views discussed are subject to change without notice. Any investment involves significant risks, including loss of the entire investment.
Audiation.